Hello everyone and welcome to Insurance Education YouTube channel. My name is Raymond Macmillan and I alluded to this in my recent video where we'd be talking about a very key cover, and in some countries it's compulsory by law. It's called professional indemnity. Who needs to carry this? Well, individuals who are providing a service like insurance brokers, accountants, or even solicitors. The cover you get for professional indemnity is, let's say you should be found negligent and your client suffers financially as a result of your negligence, then they can call on that policy for compensation. For example, if an insurance broker forgets to renew a client's policy and such law sometime that policy results in a claim, the insurer may deny paying the claim because they didn't have any instructions to renew the policy. Therefore, the professional indemnity policy of the broker will be called on to pay. Let's look at an accountant. Can you imagine an accountant failing to add an extra zero or even not putting a zero to your final figures for your year-end accounts, and you should suffer a loss? And sometimes even the government may fine you for false reporting. You can take action against your intermediary, your broker, under their professional indemnity insurance. If you are carrying professional indemnity insurance, there are two things you would need to look for carefully. One is what is called a retroactive date of inception. And all that says is you can have your cover, let's say 5 years, you're carrying it for 5 years, and you are changing insurer on the 6th year. If you have the retroactive date of inception going back to those 5 years, your new insurer will cover you for any incidents which can come to light 6, 7, 8 years after. That retroactive date of insurance is very important to make sure it's there in your policy. It's usually given when there is no break in cover, so you can smoothly shift from one insurance company to another without any gaps in your PI cover. The next thing you need to look for carefully is what is called the type of policy you've got. Some policies are what you call claims-made policies, and some of them are losses occurring. When the economy is booming and the insurers are making profit, they usually widen the cover where they say, we will cover you for any incident which occurred years ago, where the seed was sown years ago, but it's now coming to light. When things are tough and insurers are losing a lot of money from the professional indemnity sector, they restrict the cover, saying the only cover we are giving you are for incidents which occur during the period of insurance, and you are making the claim during the period of insurance. Those are the two things you would need to look for in a professional indemnity insurance policy. If you're in the medical sector, it's not called professional indemnity, it's called medical malpractice. The underwriting terms would be similar because we'd look to see how long you've been doing it, your claims experience, etc. And then a rate would be applied, and then you can get what is called medical malpractice cover. I hope this is helpful to at least one person. If you like what you've just heard, we're inviting you to subscribe to our channel. Just click the subscribe button below. And there's a notification bell at the top right. If you want to be the first to hear my next video, just click the notification bell. Thank you for your time, ladies and gentlemen.